Hey everybody, it's David Chinelli.
And Julia Blinsky.
And we're realtors with Royal LePage Signature. And this is our segment, Ask Julia. Hi, Julia.
Hi.
What am I asking you today?
So we are continuing our topic of capital gains tax. Now, today's topic, I got asked, by one of my clients. He has been living in his primary residence for now a couple of years. He's done some upgrades, but he thinks now it's time to sell his house. Now, not sell his house. He is actually, instead of selling his house, he's thinking of now making it an investment property. So,
debating between the two, which makes more sense.
Exactly. So now he's wondering, when do I pay capital gains tax and how much am I paying capital gains tax, going from primary residence to investment?
And the answer to that is it all depends when your principal residence turns into an investment property. At that point, if you saw last week, we did a calculation based on capital gains. Well, this kind of still happens, but we're not really selling, so there's not a concrete number. What you need to get is either an opinion from a realtor or an appraiser. If you have an appraiser, a third party that comes in, you have to pay $500-$600 have the appraiser come in, but they can give you the value of your property exactly when it becomes a rental property. So now you can use that number, and then when you sell it, it's the same thing. So now, as opposed to when you purchase it as your primary residence, now that needle gets moved to when exactly it becomes an investment property, and now you're only paying this portion share of the capital gains.
Yeah.
Now the other question was saying, what about renovations? As we talked about last time, you are able to write off renovations. However, it always depends on
when you did the renovations. So let's say you did the renovations when it was your primary residence. You can't, unfortunately, write that off in the capital gains tax because you didn't do the renovations when it was stated as an investment property.
Right. And think about that, right? So we're giving you an evaluation of when the property becomes an investment property. Well, the renovations play into that factor, right? So if the home turns into an investment property, you spent all these upgrades, well, that valuation of the property is going to be much higher than if you didn't do those if you didn't do those renovations. So it makes sense. Now, if you own the property and you have to then, so those renovations say you own the property for 20 years. Now the renovations done along the 20 years, it matters, right? So you probably have to redo some of the renovations you've done in the past, and that just makes sense. Yeah. So we'll give you a quick example, kind of what we went last week. So last week we said you purchased the property at $400,000 and we sold it at $1 million. Okay, so now we're going to move the needle a little bit. You bought it $400,000 and you did some renovations. Now the property is worth, let's say $800,000. So at that point, from $800,000 to $1 million, again, you can write off some of the expenditures. So let's say you've only $50,000. Now your capital gains would be $150,000 as opposed to, it would have been, the million minus the $400,000. And then you get taxed 50% on that, and there's your capital gains.
Yeah. I
don't have to do the chalkboard on that one.
No,
I think that's pretty self-explanatory.
Yeah.
If you ever know what I'm talking about, watch our video from last week.
Exactly.
All right, guys, if you have any questions for us, we'd love to be able to answer them. We always like topics for this. Julie gets asked a lot of questions. I call you Julie? I thought I said Juliet. Did I call you Julie? Do not call her Julie. Do not call her Julie. It's her alter ego, which goes crazy. Anyway, all right, guys.
We'll see you next week.
Ciao.